Well, now, as of this June 15th, a month ago, now we're in crypto summer. Well, what's crypto summer? Crypto summer is the year leading up to the halving. So I would say that's a long-winded way of saying kind of between now and the halving in April, my guess is we drift upwards towards 50K.
When you look
April to the following April, that's where I think we could double or even treble into the fair value. By then will drift upwards toward that 100K, which is what I think is fair value for this halving.
Mark Yusko, the founder and managing director of Morgan Creek Capital, confidently announces that the crypto spring is over and the crypto summer is now in full swing. In a recent interview with the Barron Network, Yusko discussed the various seasons of the cryptocurrency market and shared his predictions for Bitcoin and the industry, particularly focusing on the forthcoming 2024 halving event. Emphasizing the significance of the 4-year crypto cycles, Yusko believes they are highly effective in predicting price trajectories. He anticipates Bitcoin's value to swiftly climb to around $50,000 per coin in the months leading up to the halving event, which he considers the current fair value according to Metcalfe's law. After the halving, the reduced supply will increase Bitcoin's stock-to-flow ratio, making it scarcer and more valuable. Yusko predicts further price surges to around $100,000 per coin, representing a remarkable 200% increase from its present price, which he deems the fair value for this halving cycle. Prominent figures in the crypto community, like macro guru Raoul Pal and Bitcoin analyst Plan B, echo similar sentiments. Plan B congratulates Bitcoin investors for surviving the worst bear market ever, asserting that the bear market is now behind us. Both Plan B and Yusko underscore the significance of the upcoming halving event, which is expected to make Bitcoin even scarcer than gold and real estate, exerting a considerable impact on its value. Overall, Yusko's outlook aligns with other experts' predictions, signaling a bullish phase in the crypto market, with the 2024 halving event being a significant driver of Bitcoin's price surge.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I mean, I hate to say it because I don't want to overpromise and underdeliver, but I think we're really just getting started.
Yeah.
Look, the cyclicality of digital assets is real. It's this 4-year cycle. And why do we have a 4-year cycle? Fear and greed. And it's kind of baked into or coded actually into the way Bitcoin in particular works, right? You have these block rewards, the amount of money or the amount of Bitcoin that is rewarded to miners for securing the network. Every 4 years, that number gets cut in half. Now, whoever thought of this, whoever he, she, they, Satoshi happens to be, it's absolutely mad genius. Well, why is it mad genius? Well, it creates movement. Well, why does it do that? Well, if you think about it, the miners, their core costs are basically fixed, electricity and the machines. And so if suddenly your revenues were cut in half because the block rewards get cut in half, most of them will go out of business. So what has to happen? The price has to rise. So there's a built-in movement of the price. And once the price starts to rise, people start to follow, right? That's what traders do. They look for movement.
Yep.
And then that creates more movement. And so we get this exacerbation of the trend. Now, part of the problem is it starts undervalued because the beginning of the cycle post the halving usually occurs around, a period after the crash, the previous crash.
Right.
So we have crypto winter, prices fall, prices are undervalued, anticipation of the next halving comes along, and investors start accumulating assets. Well, what's an investor? An investor is someone who buys an asset that sells below its fair value. So today, fair value, depending on the model that you look at, the model I like, which is based on Metcalfe's law, says that fair value of Bitcoin is around 55K. Okay, so at 30K, we're below that. So as an investor,
Sure.
I like to buy assets that are below fair value. Well, then what'll happen is as you get out of crypto winter into crypto spring, which a year ago we went into crypto spring, as we talked about, it's choppy, it's volatile. You kind of don't end up much different. I think over the past year, we're up about 50%. Now, that's a good move, but it's not the 100% off the cyclical low, but it's a nice move. So my guess is that between now and the halving in April, we'll drift slowly and calmly up toward that fair value. And then what happens is after the investors get their fill, buying the asset below fair value, then the speculators come in. Well, what's a speculator? Speculator is just the opposite of a hedger. Well, what's a hedger? A hedger is someone that has to sell something because they're producing it, like the miners, right? They're selling their Bitcoin as they produce it to pay for electricity and machines. Well, a speculator just takes the opposite side of that. They're not good, bad, or indifferent. They're just, there's a seller, there has to be a buyer. For every seller, there's a buyer. For every buyer, there's a seller. So that pushes us up above kind of fair value. Well, then what happens is we get the parabolic, crypto fall, kind of the Indian summer, the big move. And that's where the punters come in, right? Yeah. The really levered.
Yeah.
And they're going to push the price way above fair value. So I would say that's a long-winded way of saying kind of between now and the halving in April, my guess is we drift upwards towards 50K.
When you look
April to the following April, that's where I think we could double or even treble into the fair value. By then will drift upwards toward that 100K, which is what I think is fair value for this halving.
According to Mark Yusko, his predictions for Bitcoin include a price of $50,000 by next April and $100,000 by April 2025. These forecasts are based on his analysis of the cyclicality of the cryptocurrency market and the behavior of different categories of investors within each 4-year cycle. In a discussion with Barron Husko, Mark also shares his perspective on BlackRock's Bitcoin ETF application, suggesting that the asset manager's close relationship with regulators might give them an advantage over other ETF applicants. He further discusses his expectations for the rest of this Bitcoin cycle and when he believes Bitcoin could reach the $1 million mark. Here are more highlights from the interview.
The early adopter move is over, right? I mean, we're past the kind of 11% early adoption. You think about the S curve. You get the first 10, 11% over the first decade. You get the next 80% over the next decade, and then the maturity, after that. And so I think we're past early adoption. Now, part of the challenge is the law of large numbers, right? When we went from the first halving from 10 to 100, 10x move, okay? That was pretty easy because you're talking really tiny numbers, didn't need a lot of volume to get to $100 a coin. I mean, and then you went to 100 to 1,000, another 10x move. And that's a little harder, but still pretty easy. You go to 1,000 to 10,000. That was the last halving. That was tougher, although we went right through 10,000, right up to 20,000 before the crash. Well, this halving, I think, is 100,000 at fair value. So it's a 10x between halvings. Why 10x? There's lots of different reasons for why that works on the Metcalfe's law parabola, but let's just say we get to that 100,000 for fair value. Mm-hmm. It's a lot harder to go from 10,000 to 100,000 than it is from 1,000 to 10,000, right? Just need more people, more dollars. Yep. The market cap gets bigger. We're talking trillions, plural, as opposed to $500 billion. So I think it will be tougher to get the same kind of percentage move, but the total dollar move will be much bigger.
Yeah.
And that's where this supply demand comes in.
Exactly.
Not if, but when, and I believe when BlackRock is awarded their crown and they become the king and they get the first Bitcoin ETF, even though they don't, I won't say deserve it in the sense that they were not doing the early adoption work. They were not, the ones there believing in it, but now they are part of the inner circle and they know who to influence. I won't say anything negative, but they know who to influence to get the job done. Yeah. And so I think they'll get the first one. Now, whether anyone else gets it, I don't know. I look at the gold ETF, right? The gold ETF delayed 4 years. 4 years we waited for the gold ETF. And then they gave it to one group GLD took off. Now there are other gold ETFs that came along,
Right.
but they're much smaller. GLD
Yep.
really is the axe. Sadly, cycles repeat. So we will have another bear market, right? After we run, because again, I say, it's just me, I say fair value for this halving sometime in 2024 is 100K. Okay, that's my view.
Okay.
I think we'll go far beyond that because greed and speculative fervor and leverage. Now, I don't think there'll be as much leverage this cycle, Paul, as there were in the last ones.
Right.
So could we get to 200K? Could we get to 250K? You know, Tim Draper and I have talked about that 250 number as kind of half the value of gold. Yeah, I could see that.
Yeah.
But then we'll have
so
another
there's
crash.
still a lot of room.
Yeah,
for
but,
sure.
But then think about it. The next halving, which is in 2028, I will argue that's another tenfold increase as we get
All right.
broader adoption and we go up the Metcalfe's law curve. That takes us to $1 million a coin. You go back to the 13 bull market, we had like a 40x move.
Mm-hmm.
Then the 17 bull market, we had a 20x move. This time we probably have a 10x move. And the next one, we probably have a 5x move. So the order of magnitude in terms of total dollars is much bigger.
Sure.
But the multiple is smaller just because of the law of large numbers.
On Monday, Standard Chartered Bank, a British multinational bank, raised its Bitcoin price forecast, citing increased miner profitability as one of the factors that could drive the price higher. Initially, in April, the bank predicted Bitcoin could reach $100,000 per coin by the end of 2024. However, in its recent report, they revised the price prediction to $120,000, stating that they now consider their previous estimate too conservative. Additionally, the bank predicts Bitcoin to rise to $50,000 by the end of this year. The report highlights that increased miner profitability plays a significant role in driving Bitcoin prices upward. As miners can sell less of their output while maintaining cash inflows, it reduces net Bitcoin supply, ultimately pushing prices higher. Considering these predictions from Mark Yusko, Plan B, and Standard Chartered, the outlook for Bitcoin appears bullish. The expected price of $100,000 by the end of 2024 or early 2025 seems plausible. However, as with any financial forecast, there are various factors that could influence the market, so it's essential to approach these predictions with cautious optimism. We would love to hear your thoughts, comments, and observations on this matter in the comments section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.